Hello and welcome everyone to Gen2's webinar today, the ultimate financial product blueprint for 2025, the Asset Manager's Guide to the Financial Product Innovation on November 18th, 2024. My name is Stephen Liff. I am the head of growth here at Gen2, and I'm joined by Anastasia Bondareva, who heads our structuring department, as well as Mark Arsaratnam, who's our head of product portfolio. Welcome everyone. Also out there in the Gen2 assetization land, I'm hoping you're having a wonderful day on this beautiful Monday, coming to you live from Zurich. So when we start off and we kick off today's session, I have one brief question, housekeeping to everyone who's watching us outside. We're going to be opening up a chat, or I think we already have a chat open. So just to see if the chat is working and functioning, please chat in yes into the chat to see everything is running, because I will be picking up your questions in a couple of minutes. And to see if you have hi there, hi everyone. Yes, I think the chat is working. So that said, we're going to kick off the session today with a brief back look into 2024, what happened so far. We still have another 4 weeks of official market time to close the year. But of course, we're going to look into 2025 as well to look at the trends when it comes to product and product creation. That said, I'm going to ask you, Mark, first. Welcome to the show. I'm going to ask you, you've been here with Gen2 like for the past 4 weeks, so you're rather new. You have still like a fresh outside view, right? What in those first 4 weeks of 2024 with you joining Gen2, what story would you like to share with the audience before we kick the session off?
There's a lot of stories here. So again, I'm very new to the business. I've been here 4 weeks. But what I've seen is there's a lot of things that we can do in the business, right? So one of my friends is a client of Gen2's, and the fact that he's securitizing art is a really big deal for me. And so for me, that's a wonderful thing to come into. I come from traditional markets and digital assets. And so to be able to securitize art that's so tangible to me is a wonderful thing to see here.
Okay, cool. Anastasia, you've been with us for many, many years now. You're all smiley and sparky. So look back at your 2024 so far. What was like the story when it comes to products from your perspective in structuring?
I would say physical uranium.
Physically uranium.
Yes, it's like assetization and democratization of the asset at its purest. Because traditionally, physical uranium is very high barrier to enter asset, and we've made it bankable.
Wonderful. My story of the year is last week we managed to bring 2 new products to the market, which I think we'll be touching in a couple of minutes from now, which is very, 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 very amazing for everyone watching us. So we'll dive into the questions. We're going to start out with looking at the topic of mass customization and personalization, and looking at some data I surfaced from our research. We see like when it comes to mass customization and making things very, very, very geared towards investing into your beliefs, we see that 80% of the asset managers we're talking to see customization as a critical growth factor driven by them wanting to achieve alpha, diversification, etc. So Mark, I ask you, when it comes to customization and personalization, what is your take on that?
Look, I think it's a very interesting topic. I've been in the capital markets for over 20 years now. And so a lot of these traditional asset classes and traditional asset managers have only looked at a few asset classes because they all look at the same thing because we all went to the same schools, right? We value the same products the same way. When it comes to mass customization, they're looking for other sources of yield and other sources of alpha. And this is why it's becoming a lot more important for us as an industry. And what we're building here at Gen2 is a kind of a platform to do this, right? We're building the rails. We're helping you assetize anything that can be valued. And so when it comes to this concept of mass customization, we're pushing it forward, pushing the boundaries forward, because you can actually put something in your brokerage account that you couldn't do before, and that's really fun and interesting to me.
Maybe just one question to our producer here in the room. Stephanie, could you please close the window for a sec, because I think we're getting some traffic noise in here and maybe disturbing for everyone joining the session. So Anastasia, from your point of view, when it comes to mass customization and making the smallest product possible, what do you see?
Well, I think first of all, we need to understand that customization is unavoidable because the asset classes, they're constantly growing. It's like the assets appear every day, and we are constantly tapping into new possibilities. So we need to have a capability of doing even the newest asset bankable. We have AP rights appearing. We have new asset classes such as carbon credits. We need to be able to address those markets. So we need to grow together with the investment universe.
Yeah. Cool. So for everyone who doesn't know, I just want to tap, this is like a shameless plug here from my side. I brought the book with us. If you read this book, Assetization, you'll see lots of great stories that do exactly that. They show you the markets we can go into and making standardized wrappers accessible for everyone, democratizing the process. So democratization is assetization. That was my shameless plug for today. Private markets, next topic. Mark, private market. You've been in private markets for all your life, I see, right?
No, I've been in
No?
private markets and liquid markets.
Oh,
for
sorry, yeah,
all
private and
my
liquid,
my
okay.
working markets. Look, as Paul Tudor Jones likes to say, it's all roads lead to inflation. And what does that mean for rates? Rates are going to go up, right? And we've seen that from a long-term perspective. And so what's been happening is that private markets are coming in to fill the gap, right? So we've seen BlackRock, we've seen State Street, we've seen real stalwarts in the industry sort of ramping up their investment into the asset class. And let's face it, private markets, traditional markets are very good at looking at credit. And when we have private markets, they are able to actually assess credit and be a bit more lenient. So what we'll see now, at least what I think we'll see, is that we'll see the proliferation of these smaller asset managers coming into play and being able to value credit in a much faster and easier way. And so we should see kind of a boom in this kind of market for us. And it's a big deal.
Yeah, we see a lot of asset managers expanding their private asset offerings. So there's a huge move there. As you mentioned, we are the ones who provide the rails and the infrastructure to make that happen. So moving over to, what that infrastructure and what those rails are producing at the moment. So maybe Anastasia, your view on private markets.
I think private markets are an essential part of the portfolios right now. So this is the way to diversify. This is the way to reach for alpha. And I think it's important that through our platform, we don't create the assets. The assets are already there. It's just we are creating an easier way for the clients to reach out to these portfolios. And I think it's a great opportunity for all the investors to tap into something that probably before they had to really allocate a considerable portion of their portfolio to this asset class just because the entrance barrier was at much higher amount. And with Gento solution, the portfolio managers, they have an ability to allocate smaller portions to a much wider range of investors.
Does not mean that the ticket size itself remains small. It remains still the same.
Exactly.
Yeah.
Yes. So the ticket size can still be 50 million. You just break it down and maybe investments of 1 million per specific investor.
So club deals for everyone.
Yes.
All right.
Exactly.
All right.
I'll just tell one more thing on this,
Sure.
because so we are agnostic to the risk of the markets, right? So whatever the market wants to price, they can price.
Right.
They can use us as the rails to do so.
Okay. Yeah, so before we move on, just a shout out to everyone who's joined us. We have already 80 people joining this conversation. I hope they're not all from our own team. Nevertheless, 80 people are on the call today. So please feel free to add your questions into the chat pane. I don't see any questions at the moment, so I will roll on until I see questions pop up. Oh, one question's already there. I will see. Yeah, it's not a question. It's just a comment. It's a yes, which makes us confident that we're heard around the world. All right, so the future of structured products. We see structured products evolving to offer like more sophisticated options, right? Maybe question to you, what sort of innovations do you anticipate? What will shape the landscape of this product class in the coming years?
I think what we need to look into is, as we discussed already, customization, right?
Yeah.
So how do we customize? How do we build this technology? We already have the database of more than 1,000 products we can build upon. And we cannot build by just throwing in manual labor. So we need to be able to leverage to scale the technology we already have at hand. So I would say we are looking at the technology that would allow us to leverage, to harvest this data that we already have, and to be able to build upon it to enhance the offering for our clients.
Yeah, look, as Anastasia just said, I mean, we are a data first company, right? So when we talk to clients, people say, oh, it's easy to do what you do. And what our response is, well, go and do it then. And the reality, the harsh reality, is that it's actually quite difficult. We connect a lot of players together, and that connection layer is what makes us amazing as a company, because we solve that problem that people are finding very difficult to actually solve.
Is that like what we've seen in 2024 is like expanding this investment universe of assets
Yes.
additionally?
Yes, I think so. Yes, because we see more and more alternative asset classes coming in. It's not
Yeah.
only art, it's physical assets, it's new investment opportunities, it's
Digital.
club deals, it's
Yeah.
investment funds. It's a wide range. It's a wide range of asset classes, and we are sometimes even surprised what we see. I cannot say about all of them, but yeah, as I said, physical uranium. Who would have thought that
Yeah.
we would receive it
Yeah.
as a product request, but we did.
Yes.
So yeah, open-minded.
Speaking about revival, so last week sort of marked like a huge revival, not in finance, in boxing. Mike Tyson came back on the scene, and he lost his fight though, but he came back, right? And the other revival of the year is digital, Mark, right? Digital assets.
Digital assets, look, it's very close to my heart. And so it's kind of something that I used to do and I've been involved with for a long time. With Bitcoin at 92,000, all of a sudden we're seeing a serious demand. And this is what happens. Demand follows price, right? As soon as you see an increase in price, demand tends to follow it. And what we're seeing now is we're seeing people want to look at somewhat complex products. They want to look at the cash and carry trade, for example, in Bitcoin and ETH, where they go long the spot and short the futures. And these kinds of things are yield-bearing certificates, right? So people looking to how we can customize it. And the good thing about, well, digital especially, is that it's for the first time in history, we have different asset classes on the same rails, right? Historically, you had cash, you had equity, you had fixed income, you have FX, all in different ledgers. All of a sudden, they become composable in one simple ledger. And so for me, it's an exciting thing to happen. And so we're seeing a lot more demand come through on the digital asset side, which is cool.
Maybe just one topic that always or often surfaces when I have a conversation
Sure.
with students or with clients, and so is like the topic of tokenization when it comes to it. So maybe you give your view on tokenization when it comes to the financial product creation on the stuff that we're doing.
Sure. I mean, assetization and tokenization are pretty almost alike, right? So when people talk about tokenization in the digital assets world, they're essentially saying we want to have a digital representation of a physical asset.
Right.
And that could be an equity,
Right.
or it could be a fixed income
Right.
bond, for example. So then in that way, it's very similar. But I think we'll move to a stage where all settlement could happen on chain. We're not there yet. We're not there yet because of regulatory reasons. Things are moving forward in both the US and in Europe, but we're not there yet. But tokenization is essentially a way to have custody of an asset that is represented in a digital form.
Yeah.
And we do something very similar.
Yeah, we're still working on the old rails and the existing
Yeah,
rails.
but the cool thing is that we actually can digitize the real world in the existing world.
Oh, yeah.
And that makes our offering a lot more palatable.
Wonderful.
Because people think of when they look at digital assets, there's a lot of fraud going on and there's a lot of issues on that side. For us, we just use the existing rails and make things more efficient.
Yeah.
And that's really cool.
All right. So as the title stipulates, I think we're going to look into the future. I'm going to ask you once again, Anastasia, when it comes to the future structured products, when it comes to diversification, when it comes also to digital assets, what do you see? Or I don't know, you cannot share what's in the pipeline, of course, of Gen 2, but do you have like a sort of a sense of what we're going to expect in 2025?
I think we will continue at looking at digital assets, and I think what is interesting, what Mark touched upon, that it goes more into combination of asset classes. I think previously we used to see the combination of different digital asset solution in one product, and now we see more and more the combination of equities and traditional market assets and digital assets in one product. And luckily for us, we don't have any limitation on that. So we are very flexible in offering this combination of traditional and digital assets in one solution. And I think, of course, the private asset classes would continue to expand.
Let's tap into a topic that's almost as hot as Mike Tyson bouncing back on the boxing field. It is AI. AI is everywhere. We have billions and billions and billions of dollars going into funding A round, B rounds, whatever. When it comes to AI, everything is all hype. So looking at AI and advanced product creation, product development, and they're shaping the way that we're creating the products. How will AI, I know who's going to answer the question, how's AI going to impact asset manager product strategies by 2025? Can we give some guidance? Do we have understanding what the capabilities are we need? What topics or what expertise we have to develop as firms? Maybe you want to
You want to start
go
off?
first?
Yeah, I think
Okay.
I think I can start. I think as discussed, most likely I would leverage the existing database of knowledge that companies have, because this is a great way to tap into the existing is the existing data and leverage on that. But I think where the AI already contributes a lot is optimizing regulatory and legal work, because there are already solutions out there that help on this front to asset managers, to the banks, to us. And I think the market would continue moving towards this stage. I think from my perspective, maybe majority of the companies are not yet there to implement it as end-to-end solution across all the processes, but it's certainly there to see where it can contribute the most on the asset management work for multiple companies.
Yeah.
Look, as we said before, I mean, we're a data first company, and part of our goal is to make sure we can optimize every single workflow that we've ever had. And so the good thing about what we've done is we've issued so many products in different asset classes, and we have that data we can learn from. And the wonderful thing about AI is that we can deploy it and say, how do we learn from some of these things? And let's look at what the market is doing, right? So we know that the Goldman CISO, for example, is looking at how they use a private LLMs to help investment bankers with their reporting and with their analysis. So the market's definitely tapping into this. Some of it's actually quite private. But you know, we're a private company as well, and we can leverage some of those resources. And so if you talk to our chairman as well, and he says the same thing, and we want to get to a stage where we can just launch a product really quickly with the help of AI, and we can have chat agents everywhere for us.
All right.
And it's an interesting proposition.
Absolutely. They're great times to be in, right?
I think so.
Yeah, and I think one of our audiences had a question: how do you envision the integration of AI in creating dynamic tokenized products such as adaptive real estate tokens, performance-linked assets? Another topic: could AI play a role in personalizing tokenized investment opportunities for institutional and retail investors alike? Let's go for the first question. Who'd like to take the first question when it comes to performance-linked assets?
Well, I can start, because I think, to be honest, I would actually break down this product and this question is different sides.
Yeah.
For me, like, what you enable with AI is not necessarily what you enable with tokenization, right? So tokenization of financial assets already exists. We already can record our products, not entirely via SIGs, but we can record it on a blockchain. So token can, like, the certificate can already be represented by the token. The law is there, technology is there, we've done it, we've tested it. But the second part is, how do you leverage the performance with AI? We do have products where asset managers already use AI to trade. So the products are already there. Now, do you want to build it on top of real estate? Why not? Do you want to bring it in the form of a token to the market? Why not? So it's all possible. The question is, how do you want to use it?
And you wanted to chop up the question. So maybe Mark, you want to take the second part.
Sure. Could AI play a role in personalized token investments? Well, let's see. When we look at the digital market, for example, the biggest asset class right now, apart from maybe Bitcoin and ETH, is going to be stable coins, right? So collateralized USD, for example. And that's a big opportunity for us as a market. But when you're looking at actually personalized tokenized investment opportunities, I'm of the opinion it may or may not happen, but I think AI agents talking to each other and creating tokens and being able to pay via tokens could happen at some point in time.
Okay, so we're not supposed to give opinions, Mark. We're supposed to stick to our
This is my
infrastructure.
opinion.
Yeah, I
This is
know.
completely
So
my
that
opinion.
was Mark's opinion. That was his opinion. You can fry him later on this. But there's another question that came up in the call. It's from Mr. or Mrs. Well, first of all, thank you very much, Stephanie Fuchs, for giving us that question. I hope your question was answered. Let's look at Mr. or Mrs. Anonymous, who asked the following question. I'm going to pose this to Anastasia. You mentioned you do assetization. So why do you call it structured products?
Look, for me, assetization is moving the asset from physical into bankable. As I said before, the asset is there. You just want to have it in your bank account. You want to be able to look through your books and see how it performs. So it's just a way to assetize. It's means to assetization.
Yeah, I mean, look, I mean, from a assetization word compared to what structured products is, structured products is a legacy finance term, right? So we know the whole banking world knows what structured products is, and so it has existed for a very long time. Assetization is our way of saying, you know what, it's actually not that difficult because structured products, when you talk about structured products and derivatives, it conjures up this world of, oh, it's esoteric, it's difficult to understand. We're trying to make it much more easy to understand. That's why we call it assetization, because yes, it's a structured product, but it's much easier than that.
So I'm just going to pull up the book here on page number 41 within our book, Assetization. As you can see here, most likely won't know. This is here, you can see containers, right? So on this side here, we believe that the standardized container fueled global shipping and made it really possible to unify the entire world around a container and make it grow. And we believe that the standardized wrapper, of course, will make the same thing happen as the standardized container did. So everything you can put into container can be put into container thanks to assetization. That was another shameless plug from my side. We're going to head on to the next question from an anonymous attendee the question is as follows: is AI and the increased automation of process likely to lower the securitization costs, other friction costs associated with alternative assets? I think I will head that in your direction.
Okay, with pleasure. So let's look at what is the cost of securitization. The magic cost of securitization is actually wrapping the asset, so creating the ownership of the asset of whatever solution you're using. So you have to have a contractual framework behind. And this, from my perspective, this is one of the major cost drivers, because you have to have a law firm looking at this documentation to make sure this is drafted in a way that creates the asset. And I think the AI would have a possibility to drive those costs down. Yes, for sure.
Same opinion on my side.
Okay.
Nothing much to add here.
All right, Enrico. Enrico, yes, of course, you can get a copy of your book. Please DM me in a second, and I will have that. I don't know where you are. If you're located in Zurich, we'll have that couriered over to your place. Otherwise, come and pick it up. We're at Braunschweigerstraße number 5, downtown Zurich, close to the Paradeplatz. And be happy to see you, Enrico, here in our premises at Gen 2. So we're going to pick up on Saad's question here. Our fund managers, I'm going to read this out loud for everyone who's not on the chat, our fund managers who are requesting assetization of their funds, or is mostly the request coming from LPs and distributors. How do you see this shifting in the future? So I don't know if we're going to comment on our opinion, but maybe we can pick it from the technicalities of Saad's question. Maybe we can give a short glimpse of an answer. Huh? Yeah.
I would say from everyone. It's really the request might come from any counterparty involved. It can be even the investor who thinks that it's a great investment opportunity he wants to share with his friends and family. So it's really it can be any party in the value chain.
Yeah, I mean, look, this is the way things are moving forward for us as well. So we've gotten requests in different parts of the globe about this, and it's really if you're a master feeder agreement or if you're LP or GP, a lot of these if any part of that structure, any part of that value chain, as Anastasia just mentioned, will come and say, "Oh, this could work for us," because it reduces the cost immensely.
Yeah. So next question. Yes, Enrique, we're going to send the book your way in a second. Yeah, I'll pass by. Welcome. Okay, so one question I have, and this goes into a question that is dear to my heart because it sort of always gives you the opportunity to balance risk appetite or the appetite and assetization willingness. So like its topic is risk management and compliance, right? So we're looking at compliance and compliance innovation. Yes, regulatory demands are evolving. I would say they're not evolving, they're increasing. They're making life not easier, let's put it that way. So asset managers integrating technology in order to enhance risk management and compliance. What are they looking into, or what are they looking at in 2024, and what are they going to look into 2025? What do you think?
I think what we see in the market is there's more and more alignment between different counterparties on the standards and documentation. that they're expecting from each other when it comes to due diligence and compliance and adherence to regulatory requirements. And I think it's a great trend, because once you have the aligned requirements, that's where you can leverage further technology, because technology would know what to expect depending on what counterparty you are working with. And I think while now we're looking at the alignment of the data points, the next step would be leveraging AI to enhancing the process and making it easier. So the person doesn't need to look up in a database the name of the counterparty, that they need to ask their solution, their tool, to basically help them review the counterparty they're dealing with.
Doesn't that already happen?
Well, that's a good point. That's a good question. You would think yes.
Mhm.
But I'm not 100% sure based on my experience so far.
Okay.
I mean, look, technology oftentimes gets built without considering regulatory environment.
Sorry,
Right? Oh,
the sun's shining in, finally,
more
finally.
sunshine.
Sorry, Mark.
So tech normally gets built without considering regulatory environment.
Mhm.
And it also depends on the asset class.
Mhm.
And so with the more traditional asset classes, we've gone through 60 years of evolution on this side. So we've become a bit more, I guess, it's evolving in a slower pace because of some of this stuff. Because they've existed for 60, 70 years. And so regulation happens at a slower pace. On the newer asset classes, we should see a lot more regulation coming through. Look what's happening in digital assets with MiCA, right? And even if you're tokenizing assets, you have MiFID II requirements. So we're seeing these regulatory requirements come out of the woodwork for us. And so we as a technology provider, as a platform, we build to those standards because we have to. There's no choice.
Okay. All right, we have Anonymous coming up with another question. Once assets are bankable, how are they priced? I think that's a good question. Does someone make a market, or is there a calculation agent? Honestly, I think this is one for you, right?
Yes, I think that it is. So the short answer, yes, there is a calculation agent. A bit longer version is it depends a bit on the market, on the asset class, right? If we're talking about the portfolio of bankable assets, more traditional assets, we would be the calculation agent would be gaining the data from the custodian pricing the data. And then if we're talking about more non-traditional alternative asset classes, it can be valued at costs. It can be valued by the engagement of the third-party valuation provider, which is experienced in the area. So let's say for the art, it would be art gallery or a similar investment solutions provider, valuation provider, or for the let's say private loans, it would be outstanding amount plus accrued interest. So there are different valuation technology in place, and there would be a way to price those assets in accordance with the market moves and not creating the market.
So we started off today with the topic of mass customization, right? And I'd like to phrase or paraphrase Warren Buffett, who once said, invest in what you know. Right. And at Gen 2, we say possibility in the future could be invest into what you believe in. Right. And in the book, there's a story of Ada who invests in what she believes. And once another shameless plug. How do you think, is that already happening today? Are we investing in what we believe in? And if yes, what proof of evidence do we have?
Well, I think we see that the new assets are being opened up for investments for the investors for allocation to the portfolio of different investors. And I think there is a reason behind it. Not all of these investments are purely of return, like targeting the specific return. I think sometimes it's really about the idea. If you look at the I don't know, like addressing the liquidity gap of SMEs. Sometimes it might be not necessarily about creating the value, like it is of course creating value for investors because you're tapping into the new market, but it's also about making democratization of finance. So I think sometimes it's a combination of both. Or alternative asset classes such as art, it's also about passion, about idea that you are owning something that is not available to everyone. I think it's
Nice.
a combination of both, but I might be just, yeah.
I don't know if you want to share this
Driven by
publicly.
idea.
Yeah. So I'm not going to ask you what you believe in, what you'd invest in, but most likely it's going to be interesting to understand because the Gen 2, what we've done in the past 6 years is really invest into or help our clients invest, thanks to technology, into such exotic and funky stuff that really outlier investment opportunities that I believe is just amazing. If you have a chance after this webinar, go on the website gen2.com and check out all the spotlights, the products, the term sheets that are there that are made into great stories. You'll see a plethora of great opportunities of ways that you can start investing in your beliefs. What's your view in this, Mark?
Look, I think the market is there for us. I mean, look at what's happening around the world. When it comes to access to capital, when Warren Buffett says invest in what you know, he's predominantly talking about the US markets. And he talks about equity specifically because you have a history of it, right? But when it comes
And
to
how much cash does he have?
325
320 billion.
billion. Yeah. That's
And
what's
another
causing,
question for later on. Yeah.
That's because he's worried about the markets, maybe. We don't
He's
know.
worried about the markets.
Potentially.
Okay.
We don't know. We don't know.
We don't give
We
opinions
don't
here.
give opinions.
No.
Look, this whole access to capital, I think, is the biggest part of what we do. We're giving global players, small or large, access to capital in a securitized way that is bankable. And that is huge.
Cool. So before we move into the next question that we have online here, once again, a short shout out to everyone out there who's maybe silent, who's maybe a little bit of an introvert, but now has the opportunity to go extern and share his or her question with us. And the next question is coming from Stephanie once again. And this is going to be a tough one because most likely we not be able to answer it in full extent. I'll read it to you in the context of before talking about regulation. How do you envision tax frameworks evolving to address challenges such as asset valuation, reporting requirements, and cross-border compliance, particularly with the implementation like CARF? What impact do you foresee this having on both issuers and investors? Most likely not just in the token, but tokenized asset space. So this is like an opinion.
Yeah.
We have to be careful with this one. What do you say, Nasia?
I would say that we see that structured products are being integrated in the tax frameworks, and we see that our investors, our clients, they do know where to go and where to ask if they need a tax opinion on how structured products would be treated within their portfolios. But I think the situations are really so unique, and we are not tax advisors
No.
actually say how it would be developing in terms of the market. But I think that the structured products are just being recognized as a separate financial asset more and more, and we will just see more and more additional clarifications being issued on that, on how to integrate it further into the portfolios and tax reporting.
Yeah, I mean, look, derivatives and structured products have existed for a very, very long time. And so we have regulatory frameworks around this already. This is securities law, by the way. Yeah. Both in the US and in Europe, this already exists. When it comes to crypto asset reporting and frameworks, we know that there's a lot more scrutiny on these assets because it's crypto, right? We get it. But with MiCA coming into place, again, I'm not giving an opinion here, but we're seeing a lot more regulatory impact in the space. And so when it comes to pricing, comes to valuations, the way custodies work, the way self-custody works, the way custodians work, it'll all kind of collapse or congeal into a more, I guess, a more formal framework. And we should see that coming, especially with MiCA happening in the next couple of months. So watch the space is all I can say, really.
Yeah. So finally, a question for me. What makes Gen 2 unique versus its competitors? And all I can say, look around you, the bright people, the bright talent, everybody within the team making things happen, making assetization happen. But no, seriously, if you look at what Gen 2 really does, assetization really makes it possible to assetize all assets. You can do anything with the standardized way we're approaching this with our technology. You can take any asset. Number two is the dedicated issuer framework, meaning you can get that off the balance sheet. You get your dedicated issuer, your own product within your own orphan structure out there to make it possible to put that off the balance sheet, maybe to put some or take the stress off of your balance sheet, whatever you want to do. So the dedicated issuer, and of course, number 3, and I believe many of you attending this webinar are clients of Gen2. You most likely love our platform as much as we do. Gen2 Pro, the platform that makes it possible to build, create, and manage all kinds of great products. And if you haven't checked it out, feel free to call our sales team to give you a demo on Gen2 Pro. It's really awesome and makes assetizing and securitization so much easier. Therefore, that's what I believe makes Gen2 unique compared to its competitors. Did I answer that correct?
Perfect.
All right. Okay. So let's look at Enrico's question. It's great to see art being treated as an asset. With that in mind, is there any possibility of lowering the entry barrier, whatever that may mean, while the management cost for a 50 million asset is understandable, it can become prohibitive for smaller items like a piece of art, a single piece of art, I assume. Maybe, Anastasia, you want to go first?
Well, that's an interesting question, but actually the products that have been securitized with us, they have a management cost linked to the value of the portfolio. So it doesn't have to be 50 million.
Okay.
It can be 1, 2, 5, 10 million asset, or you can even do a combination of 100K pieces in one portfolio and make it really flexible. So the management costs, they're not subject to some minimum, right? So it's really just linked to the portfolio value.
Yeah, I mean,
I mean,
much more to add on
it's
this.
not just art being treated. I mean, I remember this
Yeah.
instance where trying to assetize a Spotify playlist, for example, right? Or maybe an IP portfolio of a university. So everything
Yeah.
becomes possible, right? That's
Yeah.
cool.
Yeah.
So Roger has a question. What's your expectation for 2025-26 regarding costs coming with the setup of an SPV and launching products on your platform? Will it be possible, or better said, worth it to set it up with, let's say, 1 million of assets? Maybe, Roger, you want to specify that a bit more, because this is like a commercial question, or even better, call Pablo within our team, and he'll be happy to answer that question, because I think he'll have the right answer for you. So maybe, Roger, sorry for not answering the question right in detail here, but I think Pablo Hodar, which with our sales team, is very skilled and very open to answer that question. Next question, who are typical Gen2 clients? Well, this is like a AMA session all of a sudden, right? Who are, I mean, everyone is welcome. I mean, come on, guys, everybody at everyone is welcome. We assetize everything, really. I mean, there's no typical Gen2 client. We have all walks of life come in through the door. Most likely we would see asset managers typically coming in that want to run their strategies, that want to create value for their clients where there was no value before. Asset managers trying to seek alpha, diversifying their profile, but all the way down to banks who are taking our great Gen2 Pro for Banks offering, which is bankable AMCs. I mean, very, very many views. You've seen much more clients than I have, right?
Well, art gallery.
Art galleries.
So it's really, I would agree with you there. It's really about who wants to create value. It can be also a person interested in promoting their own asset. Doesn't have to be limited to asset managers. We are always happy to connect the right people together.
Yeah, I mean, just another plug there. If you have the opportunity to come and join us on May 21st at Acid Rush in the Kaufleuten in Zurich, I mean, that's a panopticon. That's a plethora of like what our clients are: crazy, funky people doing great stuff, creating value where there was no value before, on stage. I mean, I invite you to come and join us at Acid Rush and have a look there and see for yourself, not just to go on a boring website where we're bringing out all these spotlights, but to experience that in flesh and blood on stage. Mark.
Yeah, I mean, look, we work with a lot of entrepreneurs as well who have a dream, have an idea, and they want to figure out a way to raise capital and assetize what they're doing, and that's really very cool. We also talked about banks before, but we reduced the cost of issuance to almost nothing for them, because if you are a traditional finance company, you're a bank, and you're issuing off your balance sheet, there's a cost of capital involved here. With what we do, it's completely off balance sheet. So you take away that cost, and it becomes much more benign for you as a business. So for me, it's a big sell.
Yeah.
least from my perspective.
Yeah, I'm just checking the stats here on our attendance. We have 69 people still on the call, so we're doing not that bad. I mean, not the drop-off is not that bad. So that said, maybe once again, my invitation, if you'd like to share your question, feel free to do so. You can also do it anonymously, so we do not know who you are. It could even be from internal questions from our team. I don't know if anybody's watching from the team. Nevertheless, feel free to ask your questions. We're happy to answer them here in the session. Coming back to the democratization aspect we were talking about before. So we're living in this era where we see on the books, roughly our research is 112 trillion US dollars of assets that are on the book, right? That's, everything that the UBSs, that the BlackRocks of the world have on their books. But apart from that, we say in the book, we see 78 trillion non-bankable assets. How can we make that happen? How can we make that democratization, that access to those $78 trillion of non-bankable assets fast and easy? How can we unlock that value for our viewers?
Technology.
Technology.
Gen2 was built on technology and we're just continuously enhancing it.
Mhm.
This is the way to move forward because as we discussed before, you cannot just do it with hiring more and more people. You cannot just do it by throwing the human capital at it. It needs to be technological capital that we are building. We have a great team in-house.
Yeah.
We are constantly developing the solution. We have great minds here who are constantly working and thinking about how to make our processes more streamlined, more optimized, more enhanced, so we could scale. So we can address this market opportunity. And again, it's not stopping there. 78 trillion is just what we see now. The assets are constantly evolving. We've securitized IP rights for the movies. I mean, the movies are being created every day. The market is there and it's just constantly expanding. We cannot stop.
Yeah, weather, betting,
Yes.
there are all kinds of stuff, right? And there's limits. There's
Exactly.
also limits to this. Once again, limits are outlined in the book as well. Okay, Mark, sorry.
I mean, I remember when the first Bowie bonds came out.
Oh, yeah. Bowie bonds. Everybody out there who knows David Bowie
I
bonds.
just aged myself.
Yeah.
That's okay. I get it.
There's no ageism at Gen2.
Yeah, I mean, look, I think what we're doing is we're a fintech player, right?
Yeah.
So we're very, very process driven and we're making sure that we can create a platform for people to Again, there are not many fintechs out there doing what we do, right? The market right now, there was no issuance or no fintechs that came out in 2023. And what we're doing is pretty cool, right? So maybe you got Revolut's in London, Monzo's in London, you got Klarna maybe in Sweden, it's recently IPO'd. What we're doing is fully technology based and very, very process driven.
Okay. 3 more minutes to go,
Oh.
and we have one more question here from Mr. or Mrs. Anonymous. Could you elaborate? This is nice. This is SME financing, right? So we're picking up on this one, which is great. Could you elaborate more on how I can use assetization to help finance the expansion of a mid-sized business? What are the advantages over traditional financing means? Who wants to go first?
Nope, me.
I want to go.
I just can't compete.
This is
with
my,
that.
All right. Love it.
This is my personal when I joined Gen2, that's what was driving me actually to join the company, because I saw that this is a solution to address this gap in financing for
Absolutely.
SMEs. So as a business, as a small business, you have an opportunity to either go for debt finances or equity financing. And there are ways there to do it through the banks, but banks are expensive, investment firms are expensive. And I think through our solution, it's actually a much easier way to optimize the cost and to get access to financing in a much easier way, because we can create products that are offering securitization of both sides, of both equity and debt. And you have an opportunity to go to this product. Yes, it's limited to institutional and professional clients, but you can offer this product directly to the people with capital without going through the banks, without asking them to take it on the balance sheet or place it or price it or whatever. It's really directly market opportunity to raise funds.
So you could do like a credit link note.
Yes.
You could do an AMC.
You can do the combination of both in
Oh,
one
yeah.
product. So it's
Awesome.
very, very flexible.
Awesome.
And your cost would be really limited, because you don't have to pay the commission for
Yes,
the people
yes.
who would originate that
Awesome.
for you.
Yeah,
We started the whole conversation off with the private credit markets,
Yeah,
right? So for
right,
me,
right,
this
right.
is a really big deal.
right.
And private credit markets tend to be a lot more immutable to financing for SME-sized businesses. So this is the kind of route that maybe you want to have a look at because it makes a lot more sense.
Right.
And we can help on the side, obviously.
All right. So one last more call for entries for questions before we wrap things up. I'm just going to keep the mic open for a second. Before I close things off, though, I ask both of you to complete the sentence, and this has been prepared, though, so they have to have
yeah.
an answer prepared for this one. And the question is, Anastasia, could you please complete the sentence, the following sentence? Assetization to me is,
Moving the assets from physical to bankable.
wow,
Love it.
love it, love it. Moving the assets from physical to bankable, making everything bankable, investable. Cool. Mark, your question, once again, complete the sentence. Assetization to me is,
Assetization to me is equal opportunity for yield.
That's a lot of democratization in
Yeah,
there.
that's what we do.
Wow. All right. So that was, I thought we could wrap things up, but there's more questions coming down the road. Let me just check here. We can take one more. Which one can we take now? Was it the anonymous or anonymous? What do you think?
I'm just like, I'm looking for the question.
You're looking for the
Yeah.
answer? You got the answers.
No, I'm looking for the questions.
Like, sorry, I can't see this. Okay.
You can't see it.
There we go. No, I see
Okay.
it now. There's a camera blocking.
All
it.
right, there you go.
Sports. That's okay.
So I think we'll take the second last one before we wrap things up. Okay?
Yes,
Yeah, it's
it is
easier.
going-
It's easier.
It's just like it's gonna
You
be
can
fun,
call us
so
for
yeah.
the second one. You can call
Yeah,
us
for
for
the
the second.
second, please
Yeah.
reach out to us.
Yeah, okay.
Get to that.
All right.
Happy to discuss.
Okay, so the question is, when and by how much will AI be trustworthy, quote unquote, to reduce process legal fees for structuring, or will the fees simply move to another form of oversight, I assume also, and control?
I don't think we can estimate the cost at this stage, but would it reduce significantly? I would say so, because we already see the solutions that can outsource a big chunk of work to the automated to the automated processes. And I think this just take the fee, the legal fee of a paralegal or the partner in the law firm, and just it would be eliminated or significantly reduced. So instead of 10 hours, maybe they can build half an hour. So
Yeah. Look, I think we're coming down to a path where we still have controlled AI, and that's what's going to work for a lot of the companies out there. We've not gotten past a lot of the hallucinations that still exist in this world when it comes to AI. So we're moving down this path, but we're not close to it yet.
Oh,
You know,
no.
Well, Anastasia, Mark,
pleasure.
dear audience, thank you very much for joining us for the session. We'll be kicking off more sessions like these in the future.
Sure.
Give us feedback. Tell us what you believe we can improve on, what we did good, what we could do better at. Thank you very much for joining. If you have questions regarding your setup, questions regarding your assetization project, please feel free to reach out to our team. We're happy to support you. If you already are a client with ours, please get in touch with your customer success concierge, with your key account representative. They may have something great for you in the pipeline they can offer for you for the end of the year. Just get in touch with them. That said, thank you very much for joining us from the home of assetization, Gentoo at Brandsteigenstraße in Zurich. I say goodbye, farewell, and see you next time.